Hello everyone, this is Ken Martinez again with Market Investments, introducing our next video in our series, Due Diligence in Buying. First tab of states, this is really just a complete state listing and the various aspects that you'd want to consider for each state really related to the foreclosure. And just real briefly, for each of the states, these first four columns, they just put a 0, 1. A 1 means probably good for you, better for you is, yes, 0 is no. And looking at California where I'm at, for each of these listings, I put a 0, 1, 1 if it's a trustee state, and for the most part, I think that's better for investors as opposed to a mortgage state like Illinois. I put a 0 there. Is trustee court, is that a state they operate in? That's a company out here in Southern California. I think they're a good company to use in case of foreclosure. So 0, 1 if they're, 1 is good that they're in that state. 0, 1 hard to sit states and super lean and so on. So there's that aspect, and then there's just really related information related to the state in terms of foreclosure. The next tab is Zillow. So what this tab does is you type in some addresses in the blue area and your input cells, and assuming you have a Zillow ID, so you will need to go get your own Zillow ID. Here's a website to sign up on it, and it's free, just like getting a Gmail. Once you have that, put it in this cell right here, is D2. Once you have a Zillow ID, this will work. So just type in your the addresses, click on the button, and this program will automatically go get the Zillow values. I like Zillow in terms of the free ones. I mean, nothing beats a local agent to give you a BPO, but in terms of when you're doing a quick analysis on a tape of loans that you're looking at, I think Zillow is great for a quick and easy and free estimate. So it brings back the things that you'd be most interested in: the rental, the home estimate, latitude, longitude, the website if you want to go directly to it, bed, bath, square foot, lot size, last sold date, and last sold price. So the main things you want to know as an investor, if you actually want to look at property directly on Zillow, you can just copy that cell, paste it in your browser, and as you see, it'll bring up the exact Zillow website. It's really just looking for this key number that identifies this unique house. And that's it for Zillow. If you want to start over, just click this button. That'll erase everything, and then you can type in a new address. Prices. This is something just really a quick and easy if you want to decide if a loan is worth pursuing. This is an actual property. These are real numbers from a tape I was looking at last month for myself, and a house I was interested in near South Bend, Indiana. So they were offering, the vendor was offering $25,000. So input your the information here that you get from your off of your tape. They said it was worth 75. The balance is 114. No taxes, no liens. This is where I take a look at Zillow and make sure that they're close, and here they are. Zillow might be a little bit over, but as long as they're in the ballpark. If it's not, then you should figure out why they're not close. But for me, this was close enough. And then in this cell, you should put what you want to base your evaluation on. And I am, in this case, I am actually using 75,000. And as a guideline, I'll probably use the lower of the BPO, the balance, or Zillow. So for me, that was 75,000. I put estimated rent. I do factor in if I have to foreclose, and really holding costs, because I will factor in the holding costs, insurance. It's going to cost you to service and board and custodian and recording. So there's a lot of things you should factor in. I factored in 6,000 for me. And then these are the key metrics you're going to want to look at. The vendor is selling at 33%, and okay, that's a pretty good price. But these next three that I've numbered is what I would consider your key metrics you're going to want to look at if you're purchasing first position. Well, first off, what is your price as a percent? So here's my little formula here, and my price as a percent, even though they're selling at 33, when I factor in cost. It's about 56%, and I'm okay with that. As long as it's less than 60%, I'm good to go. I do take a look at the equity in there, how many hard dollars are cover me, protective equity. In this case, it's almost 33,000, which is plenty for me on this case. And you can see what I'm doing. I'm just taking the quick sale price. So I'm not using the full 75,000, rather 85%. As a quick sale estimate. If you needed to sell, you're not going to get the full value. There's going to be discount and closing costs, and then I subtract out taxes and the foreclosure cost, any other liens, to get your protective equity. So I'm good there. That meets my underwriting criteria. I like having over 30,000. That I'm good there. And then what happens if you had to foreclose? So what's your cash on cash return? And here's what I'm basing on. Well, I have a purchase price going in. Again, I factor in all the costs, and then I take the rental estimate, times it by 12, and take 60% of that. That's 19%, and for me, that would be great. Be completely happy with that. Sort of as a worst case scenario there. I'm not using a full rental price because you're going to have expenses on that property if you had kept it for a rental. And 40% factor for expenses, I think, is a very conservative estimate. If it works on that, you should be good to go. So those are my 3 underwriting criteria, and you just have to figure out what's right for you. If you are good with that, and I was good with that, then only then will you spend more time and money to actually do a more thorough investigation. And on this property, I did double check taxes with the county. That was good there. Check title and lien position. I was good there. It broke down on C&D. I did pay $50 to get a BPO with a local agent, and she came back and said that this property was not in great condition and not in a good part of a town. There were some issues accessing the property. Anyhow, long story short, she said the property was worth, at most, in her opinion, and she lives and works there, $50,000. So that messed up the deal. I did not end up purchasing it, but I was more than happy to pay her $50 rather than write a check for $25,000. And so I did not purchase, but that's what you want to look at in evaluating the prices of first position liens. Right now in June 2015, I may be wrong in this. Just take this with a grain of salt here. This is what I think the market's bearing right now in terms of pricing on first and second loans. Just some general guidelines on what people are paying today. Arrears. So this is when you get a loan, you probably should double check it. And all you end up doing is this will takes a little bit of work because you're going to have to look at the note and see what the grace period is, the due date you should get from your vendor, as of date when you want to calculate it. That's something, well, that just depends on when you're looking at the note. The payment, the fee amount, the late fee should be either a percent or a straight dollar amount. Rarely do you see both, but I just put both here for an example here. And if there's the annual interest rate, to know if there's a remaining balance. Probably not. So this area will probably be blank. But if they do charge interest on the remaining balance, then you'll need to put that in here, the annual interest rate, the balance you should get from the vendor. So once you put this information in here, it'll calculate the late fees. That's calculated from the percent, late fee percent, the late fees from the straight dollar amount, and then from the interest, and then from how many payments are in arrears. You add up all of these, and you're going to get this one. You may end up having some excess unapplied funds you'll need to put here as a credit, but at the end you'll get 19, in this case, 19,000, and that is your arrears. So these are just a rule of thumbs. It actually ends up being pretty complex. This is, it may not be exactly to what your servicer is saying, but it should be fairly close. And if it isn't, then maybe you should ask a question. So that's it today on the due diligence in buying. Again, this is Ken Martinez from Mark Investments. And if you're interested in investing in this calculator for your own business, send me an email at mark55llc@gmail.com. And that's it for today. Thanks.